every dip gets bought, it's extremely hard to get any continuation to the downside. That magnet pull is so strong. Every time you get dips, dealers, are passive buyers over time on any dip. So it's just very, very difficult to short it. And there can be very valid short setups that I want to take that I would normally take. But in this environment, I tend to just avoid them and skip them just because I know that the continuation to the downside is so difficult, especially if you're trading premium. You can get the move you wanted, but it's so long, and it was so grindy to get any move down that you end up getting the move and your premiums are crushed. So just important to be aware of these things, and be aware of the environment that we're in, and know that if you're trading premium, especially, maybe you want to think about this day differently and just be aware of, it's hard to fight against the magnet to the upside. And um, the setups for magnets are these specific combinations, right? Positive gamma supportive charm with a magnet above. You can have positive gamma above you that's not necessarily magnetic unless you have the combination of all these factors. So that's the trend day up roadmap. And then the opposite of that, the trend day down or the flush day, which is basically what we're getting today. And this is actually very similar to what we had today, where today we opened in negative gamma, and then we ended up failing out of that supportive charm. And so anytime you're in negative gamma, suppressive charm, and price starts moving lower, it's very hard to fight this to the upside, just the same way, the trend day down. So it's just important to be aware of this, that it is harder to play to the upside in this environment. And like this picture shows on this example, the the best combination of this is when you do start in that supportive environment. You can see on the right where you started in supportive charm. But if you fail out of it into the suppressive area and the combination of negative gamma, then that really tends to add kind of momentum to the downside when you fail out of it, which is fairly similar. What we got today. Let me check this here. So we initially attempted to, I won't switch option step to the screen, but um, we initially attempted to break into that supportive and break above the charm flip today. We opened in negative gamma. The whole day was going to be negative gamma for the most part, but we tried to clear that charm flip into the supportive environment. We were unable to hold that, and then we failed back out of it. And it was when we failed back out of it, now we have the combination of negative gamma, suppressive charm, and we failed out of the supportive environment, that tends to add that momentum to the downside. And now we've just seen trend day down, every bounce has been sold. And so that's a good example of this, trend day down kind of gives you an idea of the potential for what price can do. And, IV called out 6770 and 6780 very early in the day, because if this started and we started to get this um, roadmap today, then that was likely the supportive strikes that we were going to end up seeing. And so that's where we ended up getting there, and now we're trying to put in a bottom there. So that's a good example of that roadmap. You can also have the last example is the positive gamma, suppressive charm, and this is more a factor when suppressive charm is extremely strong. Like today, it's very light, and just to make sure everyone's aware, the strength of positive gamma and the strength of suppressive charm makes a big difference. Almost every day, the majority of days are positive gamma and suppressive charm, and they can be very, very light, and it has almost no impact on price, no real influence. But in this example, you can see how heavy the positive gamma node is on the left, and how heavy the suppressive charm is, even from the start of the day, but obviously getting closer into the end of the day is very, very strong. And so when you're below the charm flip in that suppressive charm that's very, very heavy, then again, you're going to get pops are sold, and you're just fighting against that passive selling over time throughout the day. And any moves up are just very hard to sustain, uh, especially when the charm flip is trending down on the day, because it tends to be a rejection point that continues to get sold. So this is an example where the the value of gamma and the value of charm makes a big difference. It's fairly light today. Most of the day has been fairly light. It's had influence, but um, keep in mind that just because we're in suppressive charm, if it's super light, it's not going to have that much impact necessarily. I'll just pause and say, Mate, if you have anything, you can chime in. I also want to check and just make sure there haven't been any questions, anything like that.
Yeah, I'm keeping an eye on the questions. I don't have anything really to add. You're doing a good job covering it. There was one question about how do you interpret charm intraday? What tells you dealers will support the move versus unwind the move? Looks like Ivy and Elias responded in the chat, but for the video, do either of you want to chime in, or J Money, um, on that?
Yeah, if Elias is here, I think it's best for him to answer.
Looks like he is. I'm not sure if he's able to talk.
So sorry, I missed the question. What did you say?
I think you kind of oh no, no you didn't. You responded to a different question. The question was, how do you interpret charm intraday? What tells you dealers will support the move versus unwind the move?
Yeah. Essentially, the way I see charm, well, the way charm should be interpreted, um, is like a passive wind, right? Um, so on one hand, there's market makers buying and selling passively with respect to the decay of delta with respect of time. So charm measures that decay of their delta exposure across the time. It doesn't mean that the price is absolutely going to follow. However, we can understand that if the price is trending in the same direction as the charm is, well, then we might have an extended move. Okay. So the area of interest I like to pay attention to are the charm flips, where there's a change in dynamics, where market makers go, let's say, from a supportive charm environment towards a suppressive charm environment. This is where I would be paying most of my attention with respect to charm to understand whether or not the market is going to continue trending into this new environment or simply reject and remain in the same zone. Um, you're going to notice very often that these charm flips align with peaks in gamma exposure and local lows in gamma exposure. Without going into the details of the maths, but that makes sense. But essentially, these are very key levels that need to be looked into, and very often they're going to provide good risk to reward um, for your entries. Um, so whenever, let's say, the price is crossing into a, you know, is breaking down, right, from a supportive environment to a suppressive environment, pay attention to the price action when charm becomes suppressive. Very often, you're going to have a couple minutes, the first entrance in the suppressive regime, maybe a retest, and then you're going to see the breakdown unfold right after. Um, so yeah, is there an absolute way of knowing exactly if the charm flow is going to support the underlying move? Well, no. I mean, the market has many different variables, right? Dealer hedging is one of them. So you never know. Maybe there's going to be major breaking news. Monetary policy is going to change, you know. So the best you can do is to understand the limitations of the data, but also understand what is the data telling you at the precise moment. Um, so yeah, does that answer your question?
It's a good response. Let's see if he responds. Also looking through for other questions too here while we're pausing. He said thank you. It does. So thank you,
Cool.
Elias. Appreciate that.
Can I add a little something in there?
Of course.
Yeah, of course, of course. Most
So,
likely, Ivy has other um, discoveries he made using the delta exposure of. Uh,
yeah, I mean, you know, we I've been with options death for it's best to understand the basics first, right? So, some of the basic things are like, all right, if I'm in negative gamma, well, negative gamma means supportive charm. If I'm in positive gamma means suppressive charm, right? So like those are real basic things that you gotta just always already know and have that in the back of your head, right? And now, as you develop your understanding in basic things, then you can actually start using charm as another weapon in your toolbox, right? And then the best way and the best approach to use charm, and a very good example is today, J Money. I'm not in my computer, I'm actually in my living room laying down and talking. So if you could pull up today's delta dealer delta exposure for like 9:40 the 9:40 a.m. update, you're going to see the between the 9:30, let's call it 9:20 9:30, you're going to see that the dealer delta exposure profile was very, very positive. And when you have a positive dealer delta profile, right, what that means is that yes, we are likely bound to move higher based on the delta profile, right? Is that delta, J Money, or is that
Yep, this is Delta.
so what time is that update?
This is the open.
So I can't see the numbers, so like what's but anyhow, without me looking at specific strikes, you guys can see how it's all pretty much green, a sea of green, right? Except what's that red level there? I'm assuming that's gonna be 6830,
Yeah, 6820. The open,
6820.
the big strike was 6820 at the open.
Okay, right. So, but you can see that delta was pretty much positive, right? And can you click on charm real quick on the same strikes as well? Charm was right out of the open was very mixed. And this is why, I tend to actually only look at charm towards the end of the day because that's when delta really has the most influence on the particular strike of an option, right? So delta charm is pretty much like it's used based on time, right? So the life expectancy of an option comes closer to an end, like near the end, and that's when the influence of charm actually has the most impact. And that's when you guys see, 10-cent contracts go from 10 cents to $17. That's actually the charm impact, right? So when in the morning today we had charm being super messy. So to me, I never look at it. But what I'm looking at is actually the delta impact on what the positioning is bound to do. And if you look at Delta, right, like the 9:40 a.m., 9:40 a.m. J Money, can you do that? Remember, 9:30 was pretty much all green except the 69:30 strike, right? Oh, sorry, 68:30. But now let's look at the 9:40. You're going to see how Delta changes drastically, and it goes from being extremely positive to now you're gonna start seeing negative delta starting to grow everywhere in specific strikes. And then as the day progresses, you're going to see that, well, now delta is growing even further lower. And this is where, when you guys saw me call it out live today, I said, guys, I don't know if it happens, but this profile is signaling potentially a big rug pull, right? And we pretty much got uh, a little under 100 or over 100. I'm not sure how many points we went lower, but um, so that's the way I'm actually looking at options death. And this is, m- I've done this using a lot of, you know, uh, test and trial periods, right? And this is how I was able to also generate, the current models that I have, right? It's obviously using options death data, but in a little bit different, but obviously just the same way, just in a different outlook. So I hope that kind of helps a little bit. And if you guys have questions, like feel free to ask. I'm here.
Thank you, Ivy. I'm monitoring the questions here. Let's get back. Okay. Let me
Yeah.
just double. Yeah, go ahead, Jimmy.
I was just going to say, yeah. So, the main thing, you just want to start your day with just, kind of what is the general roadmap from the combination of gamma and charm, and really focus on the specific ones, the specific pairings that tend to have a little bit more uh, directional bias. Those trend day up, trend day down combinations and things like that. And so that's just your general roadmap for the day. And then for actual trade setups, you want to focus on like like we've talked about is now that you have the roadmap in the back of your head, your actual trade setup is generally based on some of those pivots, which are very large strikes, 0 DTE strikes, or the charm flip, the gamma flip, peak and polar potentially. We don't always see intraday interaction with peaks and polars every day, but focusing on actual trade setups are knowing what the roadmap potentially is. Knowing that if we've made a 50-point move in negative gamma into the gamma flip, and the gamma flip represents areas where dealers have to start selling, and we're negative gamma below, then I'm going to do a trade at the gamma flip. You can be short on a gamma flip rejection. So your actual trade setups are based on those pivots, primarily the gamma flip and the charm flip, and understanding the potential reaction spot. And the every trade setup needs to actually have a trigger, because we can have these roadmaps. Just like today, we had the potential. Yesterday we were in negative gamma and we reclaimed the charm flip, which the roadmap then is a potential squeeze higher, which we got. Today we actually attempted the exact same thing, but we were unable to sustain above the charm flip. And when we failed back below the charm flip, that's when we got the acceleration to the downside. And so, just because you have a roadmap doesn't mean that you necessarily have a trade set up until you get some kind of interaction with one of those things. So I'll talk about a couple of the examples of the different actual trade setups. On days where we have positive gamma and supportive charm environment, if we sell into a gamma peak, I mean that's a spot where there's a large dealer long gamma position there. If you sell into that, you're likely to bounce. I mean, it's as easy as that. And that's typically what the trade setups are. It's if price gets to this area, the information from options depth tells us what price is likely to do at that spot. So you have the peak bounce. If you sell into a gamma peak or a large long dealer long gamma strike, price is likely to see a reflective bounce as dealers start to buy the underlying there. So that's how you want to use the trade setups. We haven't seen a peak bounce, but that's the idea. If you're selling into that peak, close your shorts, look for a bounce for a long. Use that information. There's lots of different ways to trade to actually take action on that trade. But if you understand that price is likely to bounce as it sells into that gamma peak, there's a lot of different ways that you can trade that, whether it's via spreads or directionals or futures, or just closing shorts and things like that. So that's the first one, the gamma peak. There's a couple different rejection setups, and yesterday was a great example. There's a couple different areas where if you're moving upwards into a specific pivot, whether that's the charm flip from below, where it's supportive above you and suppressive below you, which we saw a rejection there, I believe today. Let me go ahead and switch my screen, and I can show an example of both of these two different types of rejections. All right, so I'll just do today. I believe this 12 o'clock, I believe, was the. Again, we know the roadmap for today. We're in negative gamma. The technicals intraday we know is kind of a downtrend. It's bearish. So we take all these things into consideration. It's been a fairly steady downtrend today, and every pop has been sold. It's negative gamma. We failed out of the supportive charm environment, so now we're in a suppressive environment, and we made a rally directly into the charm flip from below here. And we understand that that's an area of a potential rejection. And so the trade setup on this is you can be short. If we hit the charm flip, you know that's a potential rejection. You know it's negative gamma. So if price starts moving lower, it's going to have some momentum, and we're in a suppressive environment. So you can take a short at the test of the charm flip for a rejection there and a move lower. And this one was perfect here. 12 Eastern held. I mean, and this is what we see all the time. I mean, we hold these things within 2 points so often, and your risk reward. Usually give it a little bit of space, but I mean that's a defined, absolutely defined thing intraday that we're moving upwards into this, and you can take a short on that rejection, and it literally has zero drawdown and takes you to new low of day. Whatever this is, 68.40 to 67.80, and so that's a good example of a trade setup and how you trade these pivots, and mostly you're focusing on interactions at these areas. So that's the one from today, be a charm flip rejection from below. Now again, there's some nuance to this where if you're in a supportive charm environment, you hit the top of the supportive zone, not nearly the same effectiveness of that short, because it's passive dealer buying below you. So again, the downside doesn't move quite as well. So it's the charm flip rejection is much better when it's supportive above and suppressive below you, especially if you have the combination of negative gamma like we did today, just because things move so much better. So
I can add
that's a great example.
an
Go
analogy
ahead.
of uh, maybe why this works better in this environment with the so for instance, being in a suppressive environment and having a supportive environment above, essentially being a market maker, when charm is suppressive, what it means in essence is that your delta is increasing, right? And to hedge, you have to sell, essentially to bring back your delta back to zero. But if, let's say, just forget about the dynamic hedging and just pretend you're the market maker for a second. If you had the time, if you had to pick a particular spot and time where you would be doing this hedge, if I was a market maker, I would do it in the same spot. It would be right on the on the charm flip. In essence, if my delta exposure is increasing, right, I'm essentially gaining from upside movements. So if the price goes up, I'm gaining if the price is moving up, if my delta exposure is positive. But as a market maker, I have some risk tolerance and I need to hedge my book. And to be hedged, I'm going to have to sell eventually this excess accumulated delta exposure. But if I'm seeing that the price is moving upwards, I'm going to wait till my delta exposure reaches its peak before rebalancing my book. So that works if you're in a suppressive environment and the price is moving upwards towards the flip. Well, see it as a strong probability that there's going to be some form of rejection, right? Why? Because as a market maker, my delta exposure increased. I potentially benefited from this uptick inside this suppressive environment, but as a market maker, I need to hedge. So hedging near this flip is the most beneficial for me. Um, that's just a way to see it, if that makes sense to anyone. And similar is true when you're in a supportive environment and the price is moving down, right? If the price is moving down in a supportive environment, essentially charm in a supportive environment means that the delta exposure of the market maker decreases. So if the price is going down near towards a charm flip and the delta exposure is decreasing, well, essentially I'm profiting from this little downfall in price. Let it run. Let it run until we reach the charm flip, and then from that point, I'm gonna re-hedge my book and bring back my delta exposure to zero by buying. And this is why we see very often some rejections in a sup- supportive environment. We see support on charm flips, and then in a suppressive environment, we very often see some resistance that are stronger than the opposite, like J Money just discussed. I don't know if that made sense to you guys.
Yeah.
Yeah, super helpful. That's perfect. Thank you. Let me switch. So that's one option. There's a few different rejection setups. Let me switch to yesterday, which is a perfect example um, of the gamma flip rejection. Exactly sure what time this was. There were a couple of them here. So again, we opened inside a negative gamma environment with the top of the negative gamma environment is there's a gamma flip. The gamma flip at the top, and it's the dividing line between the positive and negative gamma. So if you've made this move, just like we've been saying, if you're making this move up into this spot, the dividing line between positive gamma above and negative gamma below means that as you keep trying to break into that, dealers have to start selling. And then the benefit of this um, setup is that if you reject, again, the charm flip itself is a pivot that we just trade against the pivot because we expect it to give a rejection. And so you can be short on a move up into this. This is, think of it as resistance, and you can be short into it. And the benefit is that it's negative gamma below. So if price does start moving down, you can get a little bit faster, more momentum move to the downside in negative gamma. And you can see how it rejected both of these here. Now the flip side is that we did have a little bit more supportive environment on the day. So this didn't get continuation all the way down, but those are still 20-point rejections, very, very tradable, scalpable rejections. So that's a good example of a rejection of the gamma flip. But because of some of the strength of the passive dealer buying from Charm, it was a little bit harder to get continuation off of those, and it just kept coming back to it and just pinned kind of against it for the rest of the day. But as far as trade setups, whatever method you want to take advantage of, understanding that if price comes into this area, that it's likely to reject, like I said, via spreads, directionals, premiums, futures, however you want to trade that. Knowing that price is likely to sell in that area you can take advantage of that in many different ways. So that is a gamma flip rejection. And then let me show the playbook here. And there's one other option that can be used for more of a rejection type setup. And this is on a day where you have a lot, you're below the charm flip in a suppressive environment. The suppressive charm on this day in particular was much heavier. And so sometimes you end up having a rally into the path of least resistance, and intraday, the path of least resistance, you actually interact with that intraday. But again, if you're in suppressive charm, the day is more of a downtrend day, and then you push into this area. Shorting against the path of least resistance has been effective also. Sometimes not quite as clean as the charm flip and the gamma flip, but the same principles apply. Um, we've seen that reject, especially when it lines up in pairs, near the same areas as the charm flip above you. But on some days, you'll reject the polar and then see continuation down. And so that's another option that we've seen work as far as a rejection setup. Let's see, I'm just flipping through this here. There's some examples at the bottom. Get to those in just a second. This is similar to what we already talked about on this example, specifically in charm. This was kind of a chaotic positioning, was kind of strange on this day. There's a lot going on these pictures, but the main thing to understand is that we were in a supportive environment, and then we originally tried to put in a bounce at the charm flip here, and then we failed out of it. And just like today, anytime we're in that environment and you fail below the charm flip and you've failed into a new environment, we know that the hedging is going to change. And in addition to other factors that day, but the fact that we originally bounce at the charm flip and then fail below it and then reject it from below and then start to sell lower. Now we're in a suppressive environment. We've failed out of it. We've rejected the charm flip from below. We've started to sell in suppressive charm, and it also paired up with failing into a negative gamma environment on the left. So those two things combined, that's a short setup. If we're in a positive supportive environment, we bounce at the charm flip once, but then we end up failing below it later. Typically, that's a sign, that the obviously we've changed environments. Now you failed into a negative and a suppressive environment, and you've rejected the charm flip. So that's an opportunity to get short either on the failure into it or on the back test specifically. When you back test the charm flip and reject and then make new lows, that's a good opportunity for a short. And you know that because of the passive selling over time and the negative gamma, that's going to move fairly quickly. You can see how quickly that traversed right down into the bottom of that suppressive zone into the charm flip below it. So that's a different example there. So there's lots of different ways to use this, but just understanding what the charm flips mean, what each environment means, what it means if we fail out of one environment to a different environment. There's that's an example of just understanding. When we failed out of that, that was a big deal. Intraday, that really changed the dynamics for the rest of the day, and that typically allows you to take advantage of that by understanding what's going to happen as we change environments.
Very
Let me
good
go to some of these
explanation.
examples. Uh, Let me go to some of these examples down here again. This one I like specifically. Um, Let me see if there's a different one. Yeah, this one's a little bit better. So um, this is an example where we open inside a supportive charm environment. We know that everything inside of this is supportive charm, but again, what really matters is the flip line. So if we open in this and we back test the charm flip line and start to bounce, that's a good opportunity to try to find a long entry because until proven otherwise, unless we fail out of this, which does happen, we've seen that happen recently, um, but until proven otherwise, we want to expect this to bounce. And also, we want to expect that if this does bounce, it's likely going to make new high of day and it's going to try to trend. Because if we look at the overall roadmap in this example, this is positive gamma with some heavy positive gamma above us, like several gamma peaks above us with very strong positive gamma. And we're in a supportive environment and we just sold into the charm flip. So, my first thought when I see this is the charm flip is likely to bounce and it's an opportunity for me to get long. And if we do bounce on that, then we're likely to trend in positive gamma and supportive environment towards that positive gamma peak and that heavy positive gamma node, which in this case is at 6590, which you can see. Because that sets us up potentially, that basically is a trade setup that gives us a potential long entry or the roadmap that potentially could be a trend day up. We know it has the potential to be a trend day up. We know that we're likely to bounce at this spot, so we get long on the charm flip bounce, and it sets us up for possibly a trend day up for runners to get all the way into the gamma magnet. That is a good example of if we open in that.
Can I add a little something there?
Yep, go ahead.
So I love this example just because I keep things very simple, right? At the end of the day, you gotta put yourself in a place where you're flowing with the money versus flowing against the money, right? And that gamma heat map above is pretty much telling you where the money is allocated, and you see all that positive gamma exposure at the top. That means is that market makers are long, and the market is always bound to gravitate towards those areas, regardless of what Delta is doing, what Charm is doing, Vanna. The market's always going to gravitate where the money's allocated. That's just the way I like put it in my head, so I understand when to take a trade. Like this example here would have been a great long, right? Because the money, the concentration of gamma, positive gamma exposure was sitting way above. So I just wanted to add that.
Yep, for sure. Also want to add. Let me see if I have any. This is another example. I just want to add that it's important to remember that we're using these the pivots as areas that we expect price to react, and the main thing is important to remember that for the majority of times, it price typically is not going to change out of one environment. So basically, we should think about it as this: until proven otherwise. In this example, we're opening in a positive gamma environment, ridiculous positive gamma. Um, Above us here, we're in a supportive charm environment. We want to expect that price is going to stay in that environment the majority of the time. It's going to bounce off of the gamma flip 5 times, it's going to bounce off of the charm flip 5 times. We expect that to bounce and hold rather than that's our thesis until proven otherwise, because it typically is going to be hard for it to fail into negative gamma and into suppressive charm. Now, if we see that happen, we can change and we'll adjust to that in real time. But basically, our roadmap for the day, most of the time, it's going to hold these things. It's difficult for price to break out of these and change environments. When it does, you definitely need to be aware of it. Like on that example where we actually did, we failed into negative gamma, we failed into suppressive, we rejected the charm flip from below and then sold lower. When we see that happen, then we say, okay, then in this case it did happen, and we need to be aware of that because that's going to change the dynamics for the rest of the day quite a bit. But it's good to basically expect that anytime we if we open in this environment, and specifically the gamma flip bounce here is another potential trade setup where we didn't ever get like a hard test of the charm flip on this side. Instead, what we got, but we have tests of the gamma flip, and like I said, it's difficult for price typically to switch and fail into that negative gamma environment and truly change environment. So actually, we sell into the gamma flip and we bounce, and we sell into the gamma flip and we bounce. And every time we bounce, we're in a supportive environment with positive gamma magnets above us. So we tend to trend up into that. And it's just important to remember that we tend to bounce on this and hold, or even trap into negative gamma and then reclaim and make new high of day more often than not. And we just want to be aware that um, until proven otherwise, expect these things to hold. Even if we trap, price loves to do this where it traps into that negative gamma and then ends up reclaiming and then making a new high. And it traps into negative gamma, and we try to short. Um, but we just want to be aware that typically that's a very difficult trade because the majority of the times it's not going to want to switch in those environments. So we need extra confirmation. Typically for that trade, you really want to see it fail into negative gamma, back test the gamma flip, and then reject and then sell lower, because so many times this will either bounce or the line will change and it'll hold, or it will trap underneath for a little bit and then reclaim. So just be aware of that, that more times than not, it's going to hold in this environment and bounce rather than um, always thinking that if we break this line, then we've failed into negative gamma and we're going to start selling. I think that's the majority. This is kind of an interesting example, but you can see how many times we held the charm flip all of these times. So we actually ended up kind of clearing above it, holding it on our back test. Every time we sold into it, we still got that bounce reaction out of it. It's very hard to actually fail below it and stay below it. But just an example where just because we test below a flip line, you know, um, don't expect that it's necessarily going to hold below that. Typically, more times than not, it's either going to bounce or it's going to trap below it every time and hold it and then bounce. So you really need some confirmation before you feel like something has actually failed below it. And usually it's fail below, reject it from below, and then see new lows to really give you some idea that it's truly going to stay in that and switch into that other environment. So Mate, if you have anything, I think that's most of our kind of playbook examples. Or if we want to review any other, I've gone over today and yesterday, any examples from this week or any other questions, we could do that. But we did have some really good examples from the past 2 days
Yeah.
already that I've gone over.
Yeah, I think that's very good. Want to try to keep these somewhat brief for people. I think this is very good review. Let's just make sure there's no other questions before we hop off. Again, for anyone joining a little later, we will try to do this on a weekly or bi-weekly basis. Just review some of the setups, reference the playbook. The playbook will likely continue to evolve. So as there's updates to it, we'll take the opportunity to share that. But I want to keep everybody in the loop with what we're seeing and give people an opportunity to ask questions on a regular basis. So it's the purpose of the call. Um, Joe asked a question, IB, for you. How does IB know where it will land by end of day? So probably referencing kind of the pins and flies that you reference. Is there anything that you want to add specifically that you look for? I know it's based off the positioning, but any clues?
I I mean, most of the time they're lucky guesses. But
You're being too
you know,
modest.
there's always clues, right, to potentially where we could pin, right? One of the things I'm looking at, as I mentioned earlier, is charm has the biggest impact, in the last 2 hours of the session. And for me, when I'm trying to locate a pin, I'm not specifically actually looking at where I want the market to close. In fact, I'm just looking to take advantage of premium decay by getting free. And when you get those flies, like today I said, hey, 67.95 looks like a great fly to get into. I think they were trading for around $3 to 15 wide, and actually I think they were even cheaper. I think they were like a buck 80, and now they're like around $9 or something, right? So you could have certainly taken that trade because as I mentioned earlier, we had boundaries after the big move lower. Now we had boundaries set in stone, which were set at 6770 to 6800. So when we have boundaries, like all I'm really trying to do is just take advantage of that theta decay by selling a strike short and buying the wings, right? And then, when I do get lucky, right, I'm essentially looking at where dealers are long. So I'm not sure if any of you guys could pull up your deaf view table for GAM exposure for today's session.
G Money's got you coming right up.
I don't know why I can't see it.
He's got it there. If you want me to reference any of the
So,
strikes, let me know.
so earlier I said I was looking at potentially a 67.75 close, but now you're gonna see that that strike is pretty much all red, which means dealers are short gamma there. Now, not often do we get to see the market close on a dealer short gamma strike. So just write that down. You're the 80 to 90% of the time, the market is always pinning a dealer positive strike. So now, if I look at the DEFU table and I go to, like right now, you have delta exposure, right? You're going to see that the 67.95 and 68.05 strikes have the most density. And since 68.05 has the most positive delta exposure, um, it could mean that we could pin that strike, and it just so happens to be a dealer short strike, right? But now, if I'm looking at gamma exposure, right, and I'm looking specifically at what strike carries the most weight, you're going to see that 67.70 is currently carrying the most weight with a little bit over. I guess Elias could correct me if I'm wrong, but the the number there means is multiplied by millions, right? Of gamma.
So it's measured in dollars. Gamma can be measured either like dollars if like the market maker had to buy shares, or simply in delta. For this gamma exposure chart, we decided to go with the dollar value, which is pretty much standard in the industry.
Okay,
So you
so
can
the
see,
dollar value I see is 62.74, but that's times millions, right? So
correct.
in theory it would be 6.274 million, right?
Yeah, correct.
Okay. All right. So, well, I just got an update and it's showing that the 6770 strike is carrying the most weight. So to me, we probably end up closing right around like 6772, and it's already three. Unless we're able to break above 6795, then we could potentially run a little higher. But for now, anywhere between 6770 and 75 would be where I think the market closes, unless we get some type of news. That's pretty much the way I'm identifying potential pin zones to try to, you know, execute a trade where I can take advantage of theta decay. That's really all you're doing with a butterfly is you're taking advantage of premium decay by selling a strike and buying the two wings, selling two strikes, selling the center strike times two, and then buying the wings times one. So I hope that makes sense. I kind of went a little longer than I wanted.
But keep in mind, the pinning is harder to guess in a negative gamma environment, which is the case today. Um, I personally don't play pins unless we have like a massive um, market maker long position, so like a very large node of positive gamma. Um, when we are in a negative gamma environment, so it doesn't mean it's not gonna happen, but it's just price is more volatile, and we might drift away fast. Um, just the overall underlying price is more vulnerable to quick price moves.
So, Elias, what would you consider a big, uh, like like node of money? Like what would you consider that?
In terms of position size, I would say like anything above like 4 or 5 thousand contracts net. Um, that's usually what grasps my attention. We've seen greater 0DT volumes in the past year or so, where positions are getting bigger and bigger. As of today, I would pay attention to larger positions, somehow around like 5,000 contracts.
So the 6770's got 6,000 contracts net, and the
Yeah,
6750's got roughly the same 6,070.
yeah, and also what I like to pay attention to. So yeah, I mean the 60s 770 uh is a potential pin, like you said. But just keep in mind that we might be drifting. I mean, it's not gonna be like a smooth like landing, necessarily.
There's gonna
Price
be
can,
some turbulence. Is that what you're trying to say?
there could be exactly. So just to keep in mind that playing these spins when the gamma is negative is a bit more dangerous. But at the end of the day, you're playing a butterfly. It shouldn't be like the core of your strategy. This is like an end of day trade, like a lotto that has a very great risk to reward. Um, but yeah, I'd just like to bring this to the attention where in a negative gamma environment, things can be harder to guess.
Yeah,
Good
I
stuff,
agree.
guys. Awesome. Good review. I don't think we have any other questions. Anything else that you guys wanted to cover? Going on about an hour. It's a good overview. Good review.
Yeah, that's cool.
Okay.
great session. Of course, these sessions are also driven by the questions. So if you guys have good questions, definitely we're gonna have good sessions.
Yeah, yeah, that's a good point. And I think as we do it more frequently, we'll get more eyes and questions for sure. So I know it's still new for a lot of people. People are still digesting the playbook and some of the ideas. So if you guys have questions after the fact, you can always post them in the chat. And like I said, we'll look to do this on a weekly or bi-weekly basis, whether it's a 30-minute or hour discussion, something on a regular basis, reviewing what's going on and all of that. So for those that joined, thanks for taking the time. If you missed it or missed part of it, we will upload the recording. But I'm gonna go ahead and end
Yeah,
the stage. Yeah, go ahead.
one last thing. If you guys do have questions, and we're not doing a we're not like oh my god, I just totally went blank. If you have any questions, you could always tag us. Tag Options Dev, me, J Money, Mate. This webinar exactly. This way, because sometimes like you have a question, you forget it, and then you could have easily just send it to one of us and tagged us. Wrote it on Discord, right? So that's a good way to do it. I'm always available. I stay up late, so anything that comes my way, I'm always quick to answer back. So thank you guys.
Awesome. Yep. Thank you, Ivy. All right, guys. We'll catch you on the next one. See you in the chat.